Now we're going to transition into the overall market conditions and what's happening with inflation. Now we're going to transition over into what's happening in the overall marketplace, which influences sales, inventory, and the Vancouver marketplace. So as a reminder, we do have a lot of inventory. When we're talking about our inventory previously, you can see that there's a lot of units under construction. They haven't even started completing. So, a lot of those properties are going to start completing, and we're going to see even more inventory coming on the market. Now, granted, this isn't necessarily going to be inventory for sale because we have a historic amount of rental product coming on the market. Given the government incentives for that product, there was financing for private developers to go and create rental. So a lot of developers who were making for market housing converted over into rental or just focused on that segment because it was the only one that made financial sense to do so. So we are going to see that product coming on the market. It is also partly why we're starting to see softening of rents besides the out migration or the lack of in migration coming into our city. And into the province, you have less demand, more completions, and more inventory around, and therefore there's the supply, and it's putting some downward pressure on pricing and rents as well. Coming back though to some of the developer inventory, we are starting to see some pretty interesting opportunities out there. So make sure you reach out to us, particularly if you're a first-time home buyer. For example, there's brand new condos like this one, Park George. This is in Surrey, right by Surrey Central, and actually King George SkyTrain station, which is one of the nicer pockets, being fully redeveloped with brand new high rises, a SkyTrain station. UBC is eventually moving their medical facility, training facility out there. You have all of the universities at Surrey Central, and you're getting these brand new high amenity buildings with, 1 bedroom, 500 square foot condos in the $500,000 range. If you can pick one up for 500 grand and 5% down is only $25,000, which isn't a lot of money to get started in the real estate market. Now, for some first-time home buyers, that may not be their ideal location to be living, but sometimes you just want to get your foot in the door. Or if the rents work and you look at it as an investment opportunity, it's another way to get started. But in this case, there's particular incentives like 0.99% interest on a mortgage, on a 3-year mortgage being offered by the developer. In this case, it must be your personal residence. I suspect this is going to be a mortgage buy down opportunity. And there's also a $35,000 credit, I believe, from EQ3 furniture packages. So you can come in and have a swanky pad at some particularly attractive prices for the next 3 years, which could be a great way to get in your home. Because of the low interest rate, you'll pay down your mortgage much faster because each mortgage payment will be attributed more to principal than it will be to interest due to the interest rate. And it could be a really great way to get your foot in the door with respect to real estate. If Surrey's not your thing, reach out to us and find out what kind of 1-bedroom condos are out there at what price point, say downtown Vancouver, because remember, downtown Vancouver is for sale. There is a lot of condo inventory, and it's probably one of the most prime places to live. CPI, so how's inflation doing? Inflation has been behaving. We had a tiny uptick in the last month of reporting, 1.9 up from 1.7 the month previous. However, it's still well below the, happiness band of 2 to 3%. And while it shows a little bit of inflation, there are market participants that believe it's kind of a short-term blip, and we're going to continue to see softer inflation, even with the results of the tariffs. You can see Canadian monthly GDP is starting to roll over, and we hear a lot about how our economic productivity is quite low, and these are concerns for the Bank of Canada, which does influence their decisions with their with their interest rate decisions. Unemployment is another big one. We are seeing a slight uptick in unemployment, 7.1 holding strong across for Canada, 6.4 in BC. We did have a jobs report of gaining 60,000 jobs. That was quite unexpected, but we've also lost 100,000 jobs throughout this year. So really we're still in about a flat position given the overall activity that's happened in the economy. And then I would argue how many of those jobs are actually private sector versus, public sector. So again, the concerns around the economy continue, especially with this extremely high unemployment rate, which we haven't seen in years, excluding COVID. Now, Bank of Canada has been discussing that they might change the way that they make decisions about their interest rate policy. So in this case, they're thinking about abandoning core inflation as their preferred measure. This is something to keep an eye out for. And I have a feeling it's the balancing act that the Bank of Canada is facing, where we know we have economic weakness and they want to lower interest rates to stimulate the economy and stimulate business. But on the same token, they're concerned that we're going to stimulate inflation. And if we have an inflation, which is one of their key preferred measures of what to do with their policy, that if inflation ticks up, they would have to continue to keep interest rates high or lower them. And perhaps what they're doing is they're giving themselves a little bit of a wiggle room where they may feel they need to lower those interest rates, may see an uptick in inflation, but not actually have to act on it because they need to stimulate the economy. And part of this too is because the changes that they make aren't instant. They don't instantly affect the economy. They have to see how their interest rate policy changes impact the market over time. And by removing this potentially as a decision-making key criteria, it will give them the flexibility to maneuver the interest rate in ways that wouldn't normally be expected if they had only focused solely on core inflation. So, to be determined. The next Bank of Canada interest rate is October 29th. Some banks are predicting another decrease to help stimulate the economy, and we shall see. We had a strong jobs report. However, we still have weak inflation, which means the economy is not hot, and there's no signs of strong economic activity to come. What do you think? Is there going to be another interest rate decrease? We shall see. But the Bank of Canada only impacts your variable rate mortgages and doesn't impact your fixed rate mortgages. The 5-year Canada bond is what controls your 5-year fixed rates. And you can see that since July, we've been on this steady eddy trajectory down. So we're probably going to start to see some lower fixed rate terms. We have been hearing 3.9 to 3.99. Those would be very good rates. And we might see a lot more of that. So it's interesting because the variable rate and the fixed rates are continuing to be very close. And now you have to decide, do you want to lock in some certainty? Because we could see some inflationary pressures, especially if interest rates do come down or the Bank of Canada lowers its rate to stimulate the economy. And of course, the impacts of the tariffs on our imports.